Now, our first question, recognize 4 business risks. We already have the answer in our paper itself marked, and I hope you marked this as we did, and all that notes we have written in the paper itself. So, the first point that we identified, remember this under business risk, right? Now, related party, we know in this side, we can also have the other answer. That's how you have to connect. It's so easy then for you to really get answer to both part A and B, because part B is you have to discuss 2 key risks. But for the completeness of the answer, I will explain business risk the key audit risk for everything, right? Whenever it's relevant, so that you will have very clear picture, key audit risk. Now both we can answer. Then I can at the same time connect to the last question, that is whenever I identify key audit risk, how am I going to audit? That is outline 3 appropriate responses. So here I can write audit response. See, all answers. The analytical procedure question can easily be answered. I showed you the answer how to write audit responses. All of these, we can quickly now speed really matters, right? Now see, usually I find to write nice letters, but I'll make sure that it's readable for you. That's why after writing here, I'll give you an answer which is nicely written, so that you can question why this is, why not this is. But finally, what I always say, your answer really matters. So the complete picture is here, right? When it comes to related party, now see, don't overwrite. Exam is all about time. Can I write 1 sentence? Yes, you will get the marks. But that sentence should need to be really powerful. We will see how to explain. What is the next point that we identified? I said one word is disruption due to COVID. See, so easy, one word, disruption, but say why? Due to COVID. They can't, case study says they can't produce, due to COVID. That's the second answer. Then our third point, again 1 sentence is enough. Third point, we spoke about low quality vehicles have come, sales drop. So 1 word is competition. So again, we can put why competition. Okay, you can say due to, right? Due to what? The low price, low cost players, say low cost product in the market. So as a result, sales drop. Actually, you don't need to write another sentence. So that's enough. But we'll add another sentence. Then 4th point that we identified was, that's a big point. Let's take the last one, environment. Okay, we'll put in the order. Environmental matter, we can directly say litigation. Now, why litigation? Due to what? Environmental, due to non-compliance with environmental law. That is that release in oil, non-compliance with environmental law. And then the 5th point is a much bigger business risk. That is, I said 1 word, but reputational risk. That is that the car, they are going to recall some vehicle due to engine problem. If I'm not mistaken, some problem. Reputational risk. It's not only reputational risk, that means this company is not going to accept that there is a problem with the car. That's why reputational risk comes. So if Toyota can say, we are recalling our product, why this company can't? And that actually question from audit point of view, when management is going to hide something genuine, you can say that's the biggest risk about management honesty. It's a big concept in auditing. You can immediately write management integrity, right? When management integrity is not there, your approach of relying on control is entirely questionable. This is not one assertion risk. We don't know whether sales is going to be affected. Anything they can change. Therefore, this type of issue is called financial statement level risk. I will explain this in more detail with another question. Financial statement level risk. Even now, I am sure some of you understood. Financial statement level means we don't know which account balance they will change because they are dishonest. That's a big point. And usually this type of issues connect to, remember, this big concept called control environment. That's a very much highly examinable topic, something called control environment. So when we do our next session, one of the session on internal control, you will get full understanding about the causal framework and control environment. So that is that. And here not only reputational risk, they are also going to file a case, litigation. Now their last issue, if you want, you can write a business. Remember, they are going to old machine, they are going to do some review and do something. If you want to say, is there a business issue? Yes, that you can connect to efficiency because they use old machines. See now how to build answer map in 5 minutes, now 10 minutes, already 5 minutes gone, efficiency due to old machines, right? Now, I got these marks, I mean examiner wants only 4, we have 6 here. Now can I have to identify only 2 audit risks. Let me use another color, right? Oh no, I'll use the same blue color, the explanation I can write in black color. Now related party, I said if you want to, same audit risk you can write the related party, but the key thing RPT when it comes to auditing, what matters is disclosure of related party transaction according to the accounting standard. Disclosure of 2 things. Remember, they have to disclose what are the parties and then a transaction with those parties. So both need to be disclosed. So that's related part. Now, disruption due to COVID, because examiner wants you to write only 2. Therefore, we should really find something really big that is auditable because we have to audit that also. Now, I said disruption due to COVID, you can relate to going concern. But are you going to take going concern? Maybe no. Because I said if you want to take going concern, you should have both financial indicator. That means this company is making huge losses. They can't pay their creditors. Do we have information like given? No. We have only operating indicators given, therefore you going concern can be there, but right now it is not a big risk, right? Because in risk assessment we have to see not only risk is there, but is it likely to happen? So then we will not prioritize for audit risk, going concern at this stage. Competition due to low cost production, yes, let us write that in black color, balance part. Competition due to low cost production has reduced company's sales. So what? When it comes to auditing, definitely I said there is a big risk. What is the risk? So we can probably take as the second big risk here, the revenue recognition fraud risk. Fraud risk. Now you need to think why revenue recognition fraud risk can happen. That why thinking is very important. The moment you think these are the possible reason for revenue recognition or sales overstatement, then it's very easy for you to write this answer. This is how we audit revenue. See, then whenever you explain a risk, you need to explain this is how this can come, so that you can know how to audit that part. Now let's take the revenue. Now in this case study, how revenue can be overstated? Now they haven't specifically given us revenue recognition policy, etc. But then general assumption, if somebody wants to overstate revenue, what can possibly happen? One is, so they are selling motor vehicles. One thing that can happen, revenue recognition due to one popular revenue recognition risk is this can be due to fraud risk, right? Fraud risk arising from, remember this word, the management pressure. Fraud risk comes from, because in the fraud session I will explain to you there are 3 things that drive fraud risk, right? So those 3 things are incentive. Incentive means there is like a target is there. Incentive. Or pressure. Now in this case there is a pressure, no? Now in this case what is applicable is incentive or pressure. The other 2 are opportunities for fraud. Third one is attitude or rationalization, but I will hold the fraud discussion now. So now revenue recognition fraud, how can it happen? One is you record revenue in the wrong period. Assertion wise, cut off. Cut off means not recording sales or recognizing revenue early. No, that's how you can record revenue early, right? Recording sales earlier. Earlier means, remember, in the proper language, before risk passes or before control passes. If you want to technically make sure that technically you are aligning the answer to SLFRS, before control transfer. That means you just raise the internal dispatch note, internal invoice and record, but sales have not, the custom invoicing has not happened before control is passed. Now that is a cutoff error that can happen, right? And other thing is they can also use sales return may not be recorded. Return, sales returns not recorded. That's another possibility, right? And then another possibility is fake sales. Sales that never happened, they may record, right? Fake means if you want assertion, this is cut off, no? Right? Now sales return not recorded can be completeness of sales return. Now another assertion is occurrence. Occurrence means only genuine transaction you can record. Now here, fake, dummy sales, fake sales. You will wonder why I write this bullet point, because that tells me to write 4 audit procedure. I have to write only 3. Another thing that you can possibly write under revenue is that incorrect price or incorrect rebate. Right, discount, incorrect price, let's say incorrect price use. Now, if I am writing these 4, let me write this answer also. Now you see we are building the entire answer. Now this session is about audit evidence. How am I going to audit revenue recognition? Because I took revenue as a big item here so that I can give you full perspective of how do we identify the business risk competition. How do we connect that to fraud risk? And then to look at what assertion level that risk can happen. Is it at the cutoff level? Incorrect prices means accuracy level, right? Fake sales relating to occurrence. Occurrence means whether sales transaction actually occurred. How do I know? What documents I have to check? I have to check for a recorded transaction whether there is invoice signed by the customer. That's my audit procedure. Oh, I can get a confirmation from data. That's my audit procedures, right? See, now this part is now extremely important. So what I'm going to explain to you now, auditing, audit responses, audit procedures, right? So that means, now that's why I put a circle here. When it comes to audit procedures, I told you normally auditor's choice is test of control, then substantive analytical procedures, the last test of detail. This is auditor's toolkit. But in exam questions, right, you don't need to specifically write test of control unless the examiner asks. Usually in audit procedures, we can support our answer with analytics or test of details. So what we are going to find out, now let's assume that they have given 2020-21 sales as 50 million, assuming, right? And last year sales as 40 million. Now we have a doubt, this 10 million. Now this seems to be unusual. They actually budgeted this year 45. How they achieved 50 million, we have a doubt. So therefore the easiest way to audit revenue is to start with, now I am explaining to you how to audit revenue. In other words, I am explaining to you another big section in auditing. How do we write audit procedures to address identified assertions, right? So the first choice is analytical procedure. So how can I write one sentence saying analytical procedure? Very simple. Compare this year's sales with last year's sales. Analytical procedure is evaluation, I said comparison. Compare this year's sales with last year's sales and budget and see whether sales is unusual. That's one. Secondly, This is a high level comparison. You can also compare breakdown of sales, sales from vehicle, sales from servicing. Now that breakdown also you can compare with last year. You will see that, and also by month. In 1 month, March, if you draw a graph, sales is unusually high March. And that tells you there is a cutoff problem. Why March sales is unusual, April sales is lower. That's the way. So now please write this answer. Now, analytical procedure. Now I am saying how to audit revenue. First thing is substantive analytical procedures. So they are the first answer I will write. Compare sales for the period with last year's sales and budgeted. That's one. Then I also said compare, that's total sales, sales breakdown. So when we say breakdown, we can get by product as well as monthly. Monthly sales. And see whether there are unusual trends. Unusual trends. Right? Now this is analytics. Then secondly, how do I audit cutoff? Right, now see the answer is aligning to this point. Now we covered, okay, how to audit the cutoff now. See, in cutoff auditing, it's a period then, no? So if I want to now cutoff means my problem is March and April sales. Always in cutoff answer what you can write. Select a sample of sales at the end of the month, March, invoices that took place, and compare. Now we want to actually see whether the sales happen. So you take a company invoice and see whether the delivery has happened in the same day. Compare sales invoices during the last week of the month, right, with the customer acceptance. That is, customer has signed the invoice. So customer has signed the delivery note, which tells you that the control has actually passed. So please write, I'll write in a blue color to differentiate, right? Select a sample of invoices. Now it's very important to mention at the end of the month. At the end of month you can say March, month March, as well as you can also check what has happened in April. At the beginning. So that's the cutoff. You check at the end and at the beginning of the next month, as well as beginning of the next month. And compare what? Compare invoice with what? Because invoice is an internal thing. With delivery details and customer acknowledgement. Delivery details and customer acknowledgement. That is how we audit sales cutoff. Now let me erase this part, analytical procedures and sales cutoff, and tell you, because examiner wants only to write 3 things. Now we already wrote 2 things. Now we want to audit, because you can't just decide what you audit, we have to ask. Fake sales. Now we have a doubt whether fake sales have been reported. So then what is the best way to audit? Select a sample of sales reported and then same process we followed for cutoff. Select a sample of sales invoices and check whether it is actually sold to customer. If customer has taken, it's not a dummy sales, and check customer acknowledgement or delivery details. Same thing that we use for cutoff, but here you don't need to limit it to cutoff period but any period, so that this covers, remember what assertion? Occurrence. Occurrence means recorded transaction has occurred. There's another way to see whether sales has genuinely occurred. That's a very powerful way of auditing. You can always write what? called a confirmation, positive confirmation. Debtor has to reply whether there is a difference or not. Use external confirmation process. Use debtor's confirmation. Right? So now you see we have written another two answers. Then another thing we wrote here, sales return have been recorded. So what we can do, check sales return during the period, especially what there is a risk that what happens in sales return. Sometimes company have lot of sales during the last month. April there are returns. So then there is a question whether this sales is a genuine sales or not. That you can link to previous issue of fake sales, right? So now check sales return details. Return, that is a credit note. Check credit notes. Now if there is a credit note, and that accounting should have been done, right? Check sales return, credit notes, and ensure relevant reversal. Sales have been reversed. Done. Then if somebody asks, how do we ensure the prices of sales? So again, select a sample and compare prices with the price chart.